Good morning, replayers. Are you guys ready to kill it? Are you ready to kill it today? Sugar Plum, Musique, Kerr, what's up? Guys, we are staring at... Good morning, my cakes, yo yo. We are staring at Bloomberg.com/markets/currencies. So this should be the first thing we're taking a little look at as we wake this morning. Welcome to the room, guys. Thank you for the hearts. Hey, hey. Hey, hey, hey. Guys, the euro is in play. Alright? If you guys want to know this URL, check that out. Bloomberg.com/markets/currencies. I use the platform for news, but this is good for people that don't have a particular platform. If you're going to wake up and start reading the currencies, every platform has a news feed built in. Right, so you can use your terminal, but if you do not have access to a broker yet, this is also a good place to start your day. Alright guys, so Euro is in play. Prime just caught 37 pips on the way up. I tried to hop on this morning, but I had too much going on, guys. I'm sorry about that. I had to take a phone call that was international, and I just got off of that. So, listen, last night where we ended off, we took this nice little scalp last night. Welcome to the room if you're new, guys. I appreciate you watching. My name is Jay Salvati. I am an algorithm developer, and we are looking at the Euro USD cross on a 1-hour chart to try and get a nice play, Now guys, you see what we see here, let me zoom out just a little bit. We're running a Fibonacci retracement from the moves on Friday. We took some very nice moves on Friday. We ended up 120 pips on Friday. Last night, we had a nice little scalp for 25 pips. You can see we have fired off quite a few opportunities. Starting at 1 a.m. this morning, we shorted the euro. Around 7 a.m. we went long, took 37 pips in this 1400 level. 1398 is acting as a very nice level of resistance here. So this is the fib retracement that we ran off of Friday, combined with the algorithm FX Prime. And right now we see that we're having a little bit of resistance, okay? So if we break this out to the daily chart, let's go out to the daily chart. We see that we have this nice move that Prime caught, and we know exactly where the choppiness is going to be, guys, all right? If we look at this chart and we look at that fib retracement, we know there's going to be chop all through these numbers. However, what we're looking for is a break in the 1334 level. And when we break that 1334 level, we can bet that there will be a very nice long down move, okay? Not in terms of a nice big candle, but we may have a pronounced sell-off. It could take a week, the rest of the week. But I expect Monday to be choppy through these levels, these fib levels that just tend to act as really good buy and sell opportunities for scalps. So if you have not run that fib retracement, you see right now Prime is firing off a short at the 1398, 1400 level right here. You know, the thing with this chart is, guys, these fib levels are going to act as basically scalping levels until we break through that 1334. So what's the play for today? The play for today involves scalping, and so set up that fib level. All right, set up that fib retracement from Friday's. This is the 1-hour chart. Do the fib retracement from Friday's pricing, the top to the low, and you can see that those levels are in fact just producing some really nice opportunities. And what they are going to help us do is absolutely minimize risk, okay? So they're basically going to minimize our risk, and when we take a position based on risk versus reward, we can be confident that if we set stops at the next fib level, that they're not likely to be taken out when we combine them with the FX Prime algorithm. So right now we've got a nice short play coming out. You see that happening right there. And the truth is that we have to have, when this occurs, we really have to have a scalping mindset. I've talked time and time again about the two ways that the market reacts: trends and cycles. Okay? And right now, the market is not in a trend. Right now, the market is cycling, and it's using the fib levels as, not just the fib levels, there are other indicators as well. There's a few sine wave personalities going on here. What is that around your bullish candles? That is the FX Prime algorithm. So essentially, right now we're only using two algorithms, or two mathematical, I guess you would say, tools here. The first is the fib, and the second is FX Prime, and FX Prime is using a multitude of data points. So, you know, it's not accurate to say we're only using two tools, because Prime has quite a large tool bag of data. However, it goes to show you how very simple tools like a fib retracement can be used to minimize risk, right? This is the Euro USD cross on a 1 hour chart. Euro USD cross on a 1 hour chart. So now what we get to see here is a peek at how to play the cycling. When the market is not trending and we have cycles, we have a nice peek of how to play those types of movements, right? I mean, you can see, look at this 1374 level, and this candle that happened at the start of the 8 a.m. hour here literally comes down to the 1374 level. You can see that the top of this candle, okay, which is the close, literally comes up right to the 1374. You can see how there are some very unique, I guess you would say, restrictions that the fib is placing on the candle heights, okay? So when it comes to the open, high, low, and close, you get to see exactly how the fib is just monitoring things and restricting things. The movement itself is not going to be made to come through a trend until we break one of these fib levels to the downside or the upside. And then that would be our definition of going back to a trending type movement for the market. So, you know, how do we play this? First of all, we're not going to try and go for any type of trend. Okay, we're not trying to make very large risk versus reward plays here, because we're cycling, and if we get 1-to-1 risk versus reward, we're probably going to be lucky with that. All right? We have to have a scalping mindset when we're bouncing between these fib levels, but we also, Cool Ball, what's up? We also have to know that once we break through the bottom or top of this fib retracement, that we are likely to start trending again. Thank you for the hearts, guys. Thank you for the hearts. Appreciate it. So we have two things that I want to discuss this morning. The first is we're starting to develop a morning routine, which is going to be basically reading a few news events, either on your platform. It doesn't have to be every news event, all right? You don't want to become a complete consumer of information and not have a trade plan when the market opens. So I suggest we just read a few news articles, maybe 2 to 3, okay? Get a feel of what the talk is in the currency markets. That could either be on your platform or on Bloomberg.com/markets/currencies. And then start formulating your trade plan. When you start seeing that most of the price action is being restricted by these fib retracement levels, you know that the price action is cycling, okay? Real Kang, hope you guys had a great weekend. Guys, can we get a quick invite? Can we get a quick invite of your followers, please? I want to just recap the morning routine and where we're at. What's up, buddy? Thank you for the invite, guys. Thank you for the invite. Like I said, even if you don't have many followers, it is very likely that Periscope is tracking the invitations to gauge whether a broadcaster actually gives valuable content. So I appreciate any hearts and invites. That will help us grow. So once you start looking at things in terms of a coder, you start looking at, hey, how's Periscope playing the broadcast, right? So the play here we're looking at is this 1400 level that is being very stubborn. Okay, we know in the back of our mind that the Euro USD is a bit overbought. All right, it's likely, very likely, that this week, maybe not today, but this week, our net is going to be down. All right, so our reward for the euro is looking to the downside. However, the thing that is going to curtail that is the 1334 level. Okay, that 1334 level at the 0 fib retracement level is going to dictate whether we break through hard and head to the downside. And you can see that it wants to. All right, note that this candle here, okay, which started at 2200 hours, okay, so we're talking about 10 a.m. For the most part, the Asia market shorted. Sorry, that was a half sneeze there. Then, all of a sudden, we get some action from London markets pushing price higher. Okay? And you can see we've got some chop here on this candle. Now remember what I told you guys. When we've got chop and prime is going to fire off long and short around a certain price level. Yes, philanthropist. Goldman Sachs is, well, that's what they print. We went over that last night, actually. That's pretty funny. We talked about that exact news story last night. I'll get to that in a second. Just note that when we have price action that dictates the algorithm going long and short over a period of time, we want to take note of that price. Okay, so 1398 is the area of indecision in the market. We write that down, and then we know that that is a particular price area where there's a lot of fighting over the prices. All right, the bulls and bears are very indecisive around this level. Now, we don't need to know why. We don't need to necessarily know why, but we know that the 1398 level is significant for more people than we could think, because it takes a lot of power to move these markets. Now, if we do come up to this fib level here, technically FX prime is long right now, so if we had a short, we would switch that and go long. Okay? There's going to be chop. There's going to be lots of chop this morning because people are very unsure of their positions. And then if prime fired back short, we would take that as well. We may lose a few pips in the chop, and we may lose a few pips in the spread, but the fact of the matter is that eventually we're going to get the moves where we take the 30 to 40 pips and even more. Right now, the hourly is looking really, really good with these fib levels. And so when you have a chart that looks really good visually, it tends to mean that people are using that chart as well. And so you want to be in accordance to what most traders are using. And right now, it looks like the big money is trading this hourly play. How do you set up the fib? There's lots of different ways. Some people have slightly different ways of setting up fibs, but it's normally the last high, okay? Some people would say the swing high to the swing low. I just do the last high to the last low, and you can see that these levels are working pretty well. But if your fib gets drawn and you're not seeing like any candles lining up with those levels, then chances are you didn't draw it correctly. And there's a few tutorials online that would go into, some very, detailed ways on how to draw a fib. But you see this 1400 level just being very stubborn, man. It's being very stubborn. And the reason being is because there you go. Will we go up to the next? Will we go up to 14, 15? I don't know. But you know, technically, right now, if we were trading specifically on the algorithm, we would be long. As soon as that the algorithm switched from the short position to the long position, we would be long, and we would know that we're trying to take a scalp here, maybe 10 to 20 pips. All right. So we're not going for any type of long positions in terms of holding period, right? Not in terms of direction, but in terms of holding period. We're not looking to take any long holding periods in the Euro USD yet, because we're just going to chop through these fib levels like as if it was a ping pong. Okay? So it's like we're playing pong in between these levels. And when people that don't use fibs see this price action, they're going to say, man, it's just so choppy. I got stopped out to the upside. I got stopped out to the downside. I got stopped out every which way. And that's not necessarily what's occurring. What's actually occurring is the fib levels are being used to bounce prices off of. So we are just going to be patient. And if this long doesn't work out, that's okay. If Prime fires back short, then we are just going to go back short. And we may lose, you know, this may occur 3-5 times in a row. And so we may actually lose 10 pips on this level because it's very indecisive, okay? So what we can do is be patient. We take those losses as short-term losses, because eventually once the market goes through the bottom of this fib, the 0% at 1334, we're going to end up with a nice trend, okay? Now, a lot of people are going to say, well, what if we go through the 14, 15 to the upside? Well, that's okay too. That's okay too. We're not necessarily trying to box in the price movement here, because essentially the algorithm is going to determine whether we take the longs or the shorts and how we take them, okay? That makes sense to you guys? You know, we would technically be long right now, and it's not going to be, you know, a large gain here. Even if we go up to the 14, 15 level, we could expect some resistance once we hit that level again, and it would be choppy again. And most people are going to take their exit, if they were long from this 1400 fib level, they're going to take their exit at that 14, 15 level. And so what that's going to do is drive the price down again. It may only do it temporarily, but once people take profits, whether it's short or long, then we're going to get some static movement. It's going to look like it's static, right? You're going to get ticks at one price level, and that's what I call static movement. The price action is moving. It's just that all of the orders are happening to occur around that level. And so the net movement is nothing. But you're getting lots of ticks exchanged, lots of orders exchanged at those price levels. So the strategy I'm looking for here is we would play the 1 hour chart. Ideally, if you guys were getting alerts, you would be getting quite a bit of alerts, okay? Long and short. Long here, short here, boom, boom. But the fact of the matter is that if you're playing this today, if you're playing the euro today, you got to really pay attention to fib levels from Friday's highs and lows, okay? Because it seems to be dictating all of the price movement for this morning. Like I said, until a player with power, you know, comes in the market and either shoots us over 14.15 or below 13.34, don't expect any nice clean trends. Probably not going to happen. But definitely our risk is to the upside. Our reward is going to be to the downside in terms of long term for the entire week. You guys have any questions going forward? This should be interesting if we actually go up to this 14.15. What do you think about the gold? Ah, okay, yes, thank you. Philanthropist brought that up, and he was in the scope. You know, it's hard to say. I'm always of the decision that why would Goldman, you know, release this type of information? And I think to myself that in some way, shape, or form, they're taking the opposite side of that trade. You know, what's the trend is this, okay? The trend is, as the Fed continues dovish statements that they're going to be very ginger with their policy changes, that's very positive for the euro and the Asian currencies, okay? That is the normality that we've set into place, that the Fed has set into place, all right? That's what the Fed has set into place. Now, if Goldman comes out and they say that it's time to start shorting those currencies, essentially what they're saying is that the Fed is going to stop being dovish, or be, less dovish than, say, China or the Asian markets. Now, if you think the Asian markets, doesn't matter what currency, but if you think that those policymakers are not going to continue devaluation faster than the U.S., you're very wrong. I actually think the statement is wrong. I don't think that those currencies will devalue faster. I don't think those currencies in relation to the USD are going to go down. I actually think they're going to continue going up. People try to call tops and bottoms all the time, but the fact of the matter is that the trend is always going to have a higher chance of reigning true than you calling a top or bottom, because the trend is already in play, and there had to be momentum to set that trend into play. So I don't even care that the guy's a Goldman currency strategist, right? I didn't hop online and see what Goldman's currency trading has been doing, but the fact that they're calling that publicly makes me think that they're probably taking the other side of that trade. Yeah, calling tops and bottoms is the quickest way to lose as a trader. Calling tops and bottoms is the quickest way to lose as a trader. Because the fact of the matter is that the trend is always going to have more force than the reversal. Okay? The reversal only occurs if you can only call top and bottom if, first of all, you're really good with fib levels. Second of all, you're really good with measuring supply and demand. Third of all, you got to look at the players in the market, and you've got to be tracking all of these support and resistance levels going back many years. Right? The trend is always your friend, especially when it comes to currencies. So when Goldman comes on and they say something like that, I'm like, nah, you're not doing that. I don't think they're shorting the markets in terms of the Asian currencies. I'm willing to bet that Goldman is still a little bit long, and they want fools to come into the market and basically start selling Asian currencies, so this way Goldman has another buying opportunity to keep the top running. And that's yeah, no problem. That's exactly what a lot of people do in terms of gaming, the markets. If Goldman issues a statement like that, all these other players, these banks, are like, oh, we might have to be ginger with our, the current longs in the Asian markets. Exactly. So, just write down in your trade charts that, the current price of the yen, the yuan, and the won, and see where the price action goes from this point forward. Goldman's statement, see if they were right. No one holds them accountable when these calls go wrong. I'm held to more accountability because you guys are seeing all of my calls live as they happen. Goldman makes an issue in a statement. All right, so we got the markets opening now. Let's see if some force comes into the market. Reading up on fibs, and how do you explain this resistance? Which particular resistance? The one that's happening right now? So this 1400 level, essentially, Fibonacci is a mathematical sequence, okay? So he discovered this mathematical sequence, and he was an excellent mathematician, and it ends up being a self-fulfilling prophecy, okay? So essentially, we know that traders across the world are using fib levels. See, we would still be long from that 1400 level. Keep that in mind. So we could take this 8 pips right now. Yes, Fibonacci. Go back in history. You can read his Wikipedia. If Prime fires off short, we're just gonna keep on. Following the moves that Prime is calling here. But yes, the fib levels are going to end up being self-fulfilling prophecies because there's going to be lots of longs and shorts that culminate around those levels, okay? But I don't know why it affects stocks. Yeah, Musique, that's why it affects stocks, because it ends up being a self-fulfilling prophecy. Other traders are using those price levels on their own charts. And so they're just using those levels to basically enter the market or exit the market. And because a lot of people do that simultaneously, it ends up either acting as support or resistance in the short term, or whatever term that, whatever time series you're using the fibs on. That makes sense? So Fibonacci himself, he had no idea that it would probably be applied to to currency markets, or maybe he did. Is what predictable? The uses of it? No, but if you go back and you read how he came up with the numbers, they're very related towards nature. There are a lot of occurrences in nature that go by the so-called golden ratio, okay? So this ratio is also termed the golden ratio. And so a lot of visual sequences and patterns that repeat in nature do so according to the golden ratio, the Fibonacci's. Okay, so that was his support in coming up with that theory, right? And then also there's algorithms that are based on Fibonacci as well. Okay, so fibs do actually control a lot of what happens in the market. To a large degree, there are banks that are running multiple fib retracements on the daily, the hourly. Yes. And where those lines tend to overlap, okay, we have very strong resistance and support levels. And you can use fibs, exclusive of daily highs and daily lows and pivot points and things of that nature. There's a whole bunch of different support and resistance theories that traders use. And you will see that they do, in fact, impact the price levels, especially when you see a price that just can't move. I mean, think about the risk that we have essentially curtailed. If the guys placed a short at 1400 or at 1398, even if you did not put a stop loss in, you've curtailed a lot of your risk, because you would just be out at 1415. You're taking 15 pips of risk. However, look at this retracement and look at how much room we got to the downside. We'd be taking out 1, 2, 3, 4, 5 fib levels to the downside. Or, 4 fib levels to the downside if we placed a short at 1400 level. So where is it likely that a lot of the price action is going to occur if the euro is oversold? It's going to occur smashing through these bottom fib levels, right? And so when we look at the fibs, we're actually just paying very close attention as to what the price action is for each level. And you want to talk about stubborn pricing. This 1400 level has acted as a resistance level going back to Friday for almost every single hour it's been involved in. The only time it was not involved was with the plays early morning today. Trade volume instead of time. Yeah, there's, Thinkorswim has a bunch of different add-ons. You could do that. A lot of people have custom indicators that involve volume and stuff like that. I don't necessarily mess with that, because in Forex, there's no centralized volume. You know what I mean? They're not using that as a data point in Forex because the markets are not centralized, which is, why they are so liquid. There's just not one market for foreign exchange. There are hacks around determining volume in the Forex markets. However, that's a trade secret that I use. Not a lot of people know about it, so I don't really tell people how to do it. Actually, I don't tell people how to do it. But the fact of the matter is that volume does not come into play in the Forex markets like it does equity markets. Right. You can never know the transactions, and especially now when it comes to dark pools and high frequency trading. I mean, you know, there's no books, so to speak, for the currency markets. So there's no volume that's being tracked. So what do we do when that's the case, right? When that is the case, we use fib levels, right? We have to start using different indicators. We use price action becomes more important in the Forex markets than it would be in, say, the equity markets, because in equities, you have a lot of traders that are making decisions based upon the volume and the price together. But not so in the Forex markets. In foreign exchange markets, you do not have that volume component as a data point. And so a lot more emphasis is put on the price action and price levels. And so you guys then need to know that as you go forward and you figure out your strategy. Forex is not like every other market. It is not. Alright? If you have an algorithm that works on Forex, though, chances are it will be applicable to other markets, because price levels become way more important in Forex than they are in, say, equities, because we just have that volume data point taken out. Does that make sense to you guys? And that's why you see so much strict adherence to the fib levels, to pivot levels, to support and resistance going back, 1 year or 1 month or 1 week. Those price levels are all taken into consideration with most algorithms. Virtual video game economies. Yeah, essentially it's a market. It's a market. Essentially, this is just virtual. This is, think about what this really is. This is the culmination of currency markets across the world. This is what the price is right here across the entire world for the Euro USD cross. And so everybody's trying to, gain pips based upon a so-called virtual price action, I mean, when you think about it, it's kind of trippy if you really think about it. And just the fact that we have enough technology to track price down to the, actual tick is pretty disturbing. Because just 50 years ago, this was not possible, right? But here's the crazy part. The crazy part is that 50 years ago, all these mathematical, statistical analysis tools did exist. And so we're just finding new ways to apply old rules. And that's why they still reign true. See, man, this 1400 level acting as a stubborn dog. Stubborn dog, this 1400 level. So now, what we need to look at is, yes, history does repeat. Go to the daily chart and see if we're firing off short yet. We're not firing off short in the daily chart. Look at how well those fib levels work, man. Even when you go out to the daily, you start seeing how it constrains. Oh yeah, there's algorithms in the market, man. I'm not the only one with an algorithm. It's just a question of whether every algorithm is working, well enough to profit. Yeah. History is always a good indicator because you have to start somewhere, and so everybody who applies the so-called scientific method, the first place they go is to historical data. You know what I mean? I mean, there's no other place that you can take the data from. Everybody's starting with historical data. And the difference with artificial intelligence is that artificial intelligence is just doing it quicker and considering the live aspect of price action. You know what I mean? Whereas most algorithms are going to be based only on historical. Artificial intelligence takes the current candle into consideration and starts doing, you know, probability analysis to determine where the price will move from this point forward. Man, this 1400 level is being a fight, but I do suspect that we are going to break through down south at this 1400 level. And what I'm going to do is, so this way, you know, we're not watching tick by tick on this chart and wasting time. I'm going to come back online as soon as it does break. Well, I might just eat my words and it might break now. But we have to expect that even if it breaks to the downside, we still may get just chop here for quite a while. Any good read you would suggest for Forex trading? Benson, good question. I covered how to go about studying Forex in the in a scope about Thursday, I believe it was. Yeah, I'd stay true to the algorithm. Right now, we'd still be long. You know, we could have taken multiple longs from 1400 going up. I didn't see that last question. But I covered how to study, and the way that you would do that is, you know, first of all, I'm probably going to come out with a program myself because I don't like most of the information that's out there. It's a little too basic. And you're not able to form any strategy off of most of the basic information. Alright, so you have a lot of very basic knowledge, but you know, having knowledge and having know-how are two different things. The know-how is going to be taking the knowledge and being able to apply a strategy based on the knowledge. That is where the critical thinking aspect and the logic comes into play. Yeah, you can go to my catch.me account. Guys, let me throw that up really quick. Are you guys ready to take a screenshot? Take a screenshot of my social profile. Ready? So, I'm on Snapchat, Periscope, Instagram, Twitter, and Blab. However, I use Periscope, Instagram, and Twitter the most. You guys can see the historical periscopes on periscope.tv for 24 hours and catch.me. I haven't taken any of them down on catch.me. And if you want to reach out to me directly on Twitter, use hashtag FXPrime or hashtag PipKillers. Those are the two hashtags I watch. Alright? So, you know, at risk of having you guys fall asleep at your desk with this slow price movement, and obviously that's why we enjoy the use of an algorithm to begin with, because obviously we don't want to watch every single tick and be under that emotional duress during trading. You know, part of what algorithms do is they allow us to outsource the emotion involved with trading, which is very important because behavioral finance, every single study done in behavioral finance suggests that our emotions do not allow us to make accurate prediction in any way, shape, or form, not just in trading. But emotions ruin our decision-making abilities in literally every single thing that we do. And I remember one of my mentors in high school told me a piece of information that still rings true to this day, and he told me, never ever make an important decision when you're emotional. And it doesn't matter what the emotion is. Never ever make an important decision when you're emotional. So it takes practice at being, you know, you have to have the resting bitch face while you trade. You have to be completely emotionless. Yes, you can, Music. There are tons of when it comes to the trading markets, electrical engineering and a lot of the algorithms that surround the field of electrical engineering are in fact in play and already being used by most of the top hedge funds and have been for the past 10 years. Everything that would be used, and you know, there are a lot of very unique people and I guess you would say strategies that stem from electrical engineering. Yep. Everything is a feedback loop. Everything is a loop. Every program that is going to be trading has some type of loop involved, especially if it's going to be taking in to consideration price action that's happening on this candle. Alright, so, you know, blah. I wish I would have hopped on earlier because this is just a blah movement. So, listen, I'm going to hop back online. If Prime does go short, yes, electrical engineering is awesome. That's a big hat tip to engineering in terms of how it's being used in trading right now. So that's a very good thing for you to bring up. If you made that connection without me telling you, then chances are you're on the right track. Thank you for the hearts. Thank you for the hearts. Alright guys, so I'm going to hop back online when this position goes south. I'm going to try and catch it immediately. I'm going to be coding while I watch the markets. So, you know, as soon as I catch it, just know that we've got some resistance to the upside here. You know, risk-wise, we would not want to be short if this price pops above 14.15. We're going to have to watch that level very closely, but right now 1400 is the place to be in terms of if you want to fight over price action and not make money. You know, there's a lot of people that are trying to go long and short here, but the winners have already been long from 1360, so keep that in mind. You got to keep that in mind that the winners have already been long from 1360. All right? So, I will hop back online, guys. Thank you for being with me, and thank you for your attention. Reach out to me on Twitter. Reach out to me on Twitter.